Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. Welcome back this week, and we've had a heck of a week on a number of different fronts. Glad everybody could listen into the radio show. Want to thank KCAA, KMET, and, of course, the Roadrunner out in the Inland Empire. They're great people, and we have a great audience that listens to the show looking for information about mortgages. That's what we talk about mainly. Real estate and mortgages, both here in Southern California, specifically in the Inland Empire, as well as all over the United States. Offices are from North Carolina to Sacramento, out to Arizona, and of course all states in between, a lot of them. I'm Jeff Barton, and thanks for listening in. If you want to catch us on Facebook, go to Facebook, type in Home Loans, Malibu Funding Inc., and our information pops right up. We talk about, let's see, this week we're going to talk a little bit about rates, as rates have not gone up as significantly as we thought they would. However, what we are looking at in terms of rates and what we're looking at in terms of the housing and what's happening in terms of, because the real estate refinance, the amount of loans that were refinanced over the past probably half decade have really been reduced half. What's happening to fill the volume void is basically what's going on today on the show. We're going to talk to several of the account executives for three of the banks that we talked to. April Lopez from Nations Direct, and we're going to also talk to Thomas Trujillo from Lone Stream, and I'm very happy to talk to them, as well as Gail Whiting out in Las Vegas, Nevada, one of the markets that we do cover. And there's a great I-15 corridor that people from the IE go to all the way out to Vegas. So there's a great synergy between those two markets because of the nature of both the desert that we all live in, kind of, and certainly the housing prices and what's happening in those specific markets. Again, we're really happy that you are tuning in today. There's been a lot of economic news in the media recently, and one of the things that I was wanting to talk about today was the news that has come out of the federal government about regulation, what's happening with the regulation, whether it's going to help or hinder in terms of money available to lend. We talked last week on the show about that. I said that I came out strongly in support of some of the things that the Treasury Department is doing to lessen that regulation in order to free up money in order to lend to you. And we went through a number of scenarios about why that was a little bit different than what it was 20 years ago, or even more now, when Bill Clinton was in there, and Bill Clinton's policies were blamed for some of the economic problems, forcing lenders to lend to unqualified borrowers, thus causing the mortgage meltdown. Well, now we're in an opposite situation whereby the money in the banks is so tight and so restricted that Steve Mnuchin, who is obviously Donald Trump, the president's pick for Treasury Secretary, came out and said, hey, look, you know what, some of these regulations are not great. So he got the controller of the currency and some of the other FDIC people to say, look, let's take a look at what we're doing and make sure that we can actually reduce some of the regulations. And some of the regulations that we're talking about is the banks have just passed, the several major banks, I guess there's 12 of them, which have passed the federal stress test. The stress test in general has been applied. We have a phone call coming in. I bet it's one of my great interviews that we're going to try to do here on the show. And I believe that's April Lopez calling in right now. Let's see if we can get her on the line.
April?
Just a half hair's breadth away, and we'll get to April. And we've been talking about, well, that's not her. Anyway, we have been talking about the rates and the regulations and what's happening with the major banks. So major banks being Citi and Wells and Bank of America and Carnegie and a number of other ones, they've passed the stress test. And what does that mean? They have to have 3% of the money that they lend out on deposit. Now, that may not seem like a lot unless you're talking $500 billion, and yes, that is a lot of money. So if, in fact, that regulation goes down to 2% or 2.5%, well, there's that much more money in the system to lend. And because of that, because they want to lessen the restrictions on banks in terms of, one of the things was the stress test, we have to develop products in the marketplace to be able to lend to you, the consumer. So one of the things I wanted to talk to these great people in the business, also Gail Whiting from out in Las Vegas, where they deal with a lot of hard money out there. But we wanted to talk about these kind of programs, what's available for you in the marketplace, how restrictions on, some restrictions on credit have been lowered, some restrictions on programs have been lowered, and the dreaded stated program, or at least some of the stated programs, are going to come back into the marketplace. Now, granted, these are non-QM type loans. Now, what is a QM loan? Everybody knows. The qualified mortgage, which was instituted by Dodd-Frank, says that you have a certain ratio, a percentage of loan to value, a certain percentage of debt to income, and a certain amount of money that you have to have in reserve and put down, and that your closing costs all in can't exceed a certain number, 3%. So if, in fact, these parameters that are currently under review by the Treasury as well as the CFPB, although the CFPB is sort of the watchdog cop on the beat, and they're the ones leading the charge to keep the momentum for stronger regulation. But all these things equal, you're going to have more of an opportunity to be able to go into the marketplace and borrow money. And the reason that is that there's money available. They're going to loosen the restrictions on the money, and the programs that the lenders are going to be offering you are less restrictive. Now, this means things like if you're a business owner and you're sitting there thinking, okay, I have all my business expenses that I write off every year on my taxes, but I don't want to be able to say, okay, I make X amount of money because I'm writing off a certain amount of money on my taxes. So I pay myself a lower amount. The money stays in the business, and as I said, the tax write-offs mean that you're paying less in taxes. So one of the programs they're going to have, or do have now, and are going to be offering more of, are these type of loans where you're going to be using your business monthly income rather than your tax returns in order to qualify for the loan for yourself as a residential business owner. If you're like I am, I'm a individual business owner, entrepreneur, and I have a business that I can use now in order to borrow money to be able to afford that house. So these are some of the programs that are going to be talked about on today's show. We certainly have more of a down payment assistance program. We have a piggyback loan program whereby you would have a 90% loan and a 5% second, and maybe only have to come in with 5% on a conventional and no mortgage insurance. These are some of the things that they're trying to loosen up the ability for a good borrower, somebody who has, a good track record of borrowing money, a good track record on credit, but who necessarily doesn't have the income in their personal income because of the business income tax statements that they have, or not statements, but the business income tax that they file every year with the IRS. So the important thing for you to understand is that the marketplace is opening up, and opening up for the better for those people who might not necessarily be fitting into the box of a Quicken Loan or a Rocket Mortgage or some of these other things. Also, there's a TIN number program. That's a program whereby you're not a foreign citizen, but you have a corporation here. Or there are those, and I have a lot of actually Brazilian borrowers that come to us, and we have now a product for them, and that product is going to help them be able to buy in the U.S. when they're not a U.S. citizen, and that's also part of the buy-in program. And there's a lot of different availability of money now, and we're trying to, as I said, because of the regulation stripping or regulation reduction, we're really trying to open up more avenues for people to get loans. Listen, I'm Jeff Barton, your voice in the mortgage industry. I'm really glad you came to listen to the show today, and we'll be right back.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Your nose just a little bit, I need the sun off, there you go. When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. We choose top models to bring down there. That takes the element out from you guys having to worry about where you're going and what you're doing. We scout out the locations even in those places to make it easier for you. All you have to do is concentrate on your equipment, your composition, shooting the images, and getting great images, whether it be for your portfolio or for you to advance your career.
There you go. Good, good, good.
We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out.
Actually, it's a little bit bright, so I'm up to 1,000. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are gonna be at 3.5.
We work through all the lighting issues and the lighting process with you, so we do the whole workflow from beginning to end. How to set it up, how to work with the models, how to work with your equipment, and in the 3 and 4 day workshops, we also get into editing, post-processing, or workflow.
A little more, just like right over the top of me.
At Hamilton Workshops, it's not just about me teaching you. We bring in top-of-the-line guys that are shooting fashion, sports, wildlife, landscape, and we have all them help you as well. They're there to teach you how to use the equipment, how to shoot, how to compose everything.
I'm gonna have you come up here, and you come down one knee. So that way you're a little bit taller than her.
I've been a sports photographer for about 23 years, and I've been published in Time Magazine, USA Today, Sports Illustrated, and I love what I do. And the secret to being a good, great sports photographer, or any type of photographer, is you gotta love what you do. And if somebody wasn't paying you and you do it anyway, then you know you're doing the right job, and that's what I love to do. And that's what I want to try to instill in any student that comes through these Jerome Hamilton workshops, is the passion and the love for every photo.
Good, 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 both of you.
So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, and you want to advance to that next level, check out one of our workshops. You can check out jeromehamilton.com. We have a workshops page that'll get you there, even if you just want to email and talk to some of us now. I guarantee you there's going to be top-of-the-line photographers, not just me there teaching you, but we bring in this industry standard people there that are going to help you. We bring the top-of-the-line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We are talking about mortgages, about your money, about what you're doing on a refinance, what you're doing on a purchase. How are you going to get qualified, and how much money can you afford to take out or spend on your house? You need a professional to be able to do that, so pick up the phone and give us a call. If you want to email us, info@malibufunding.net, and certainly you can see us on Facebook. We've got a Twitter account @Jeff6493. And certainly my bartonblog.com, all kinds of different ways. We have a YouTube channel. Go to Financing Mortgage, and you can see a lot of videos about what we do, about what we talk about every day on the show. We're 5 days a week in the Inland Empire, and I really appreciate you all listening. We bring to the show, and again, once again, we're bringing to the show somebody, and as I said in an earlier segment, we're going to talk about programs, what's happening in the mortgage industry now that a lot of things have changed. Welcome back to the show from Nations Direct, of course, is April Lopez. April, how are you?
I'm great, Jeff. How are you this evening?
I'm just terrific. Thank you very much. Okay, so you heard the intro. What is happening now that obviously we have less refinances? All the lenders have to stay in business, and certainly there looks like there's a lot of money out there to be able to lend. So what are we doing to loosen up some of the programs to be able to help out some of the borrowers, maybe possibly before it was a little strict and we couldn't?
You know what they're doing? Fannie and Freddie, which is the government security agencies, right?
Right.
They are wanting to make what Freddie will call home possible for new home buyers. Fannie says, we want to be home ready for these new buyers. We want to give them the ability to buy a home.
Right.
So what they're doing now is they're offering amazing 3% down programs for first-time home buyers, condominium purchases at 3% down, and they're giving these buyers a lower MI factor, which means a lower monthly MI rate to make the payment more affordable. They're also doing lower down payments for buyers who want to buy, say, a unit property where you needed originally 25% down. Now you can use 5% down payment to get into a unit property, say, for instance, you have family members you want to live with.
Right.
And they're trying to pool their money together. So they're making it affordable. They're keeping the interest rates low. They're keeping the loan level price adjustments, which is what makes the rates go up. They're keeping those rates low in order to provide more programs to get more buyers out on the street.
Yeah, I think that's really an important step, obviously, that Fannie and Freddie are doing. And we as lenders on the QM side, as well as the non-QM side, are coming up with programs with which to try to help borrowers who previously couldn't get in the market, and this is one of the ways, right?
Absolutely.
Okay, let me ask you a couple other questions now that I've got you on the phone. I know you're deep into the business, been doing it a long time. What do you think about the quick rise in real estate prices all around Southern California? I mean, I was reading an article today. It was like over 1% last month, from month to month. Now, that's unsustainable, right?
It's been crazy. I was just doing a market value analysis for a property that was in escrow. There were 30 comparables that were $100,000 lower in close proximity.
Yep.
However, the home rose for $140,000 over that median value, and there were 6 closed comps at that higher value. So the market is really kind of outrageous, and it's growing. The supply is low.
Yep.
So we've got high demand. So it's a little scary, I must say, because the values are really heightened. Where that will take us, I don't know, but I feel that it's a little worrisome for the buyers because the values have exponentially increased.
Mm-hmm.
So hoping they stabilize, because they have in Southern California, especially Los Angeles County, it's been a 10 plus over asking price offers in a competitive market. Everyone's overbidding.
Well, I'll tell you where they're going. They're going to Hemet. They're going to Hesperia. They're going to Paris. They're going as far out as I guess the previous high. I saw another article today that said that the highs of the real estate market have surpassed what they were in 07 and 08. It's truly amazing.
It is. So, that suburb mentality is you really got to get out of into the suburbs.
Yep.
To be able to be more affordable. Like you said, Palmdale, all of those, Hemet, Hesperia. But then you have the commute. So then you have, from a lending standpoint, are we thinking that it's okay to drive 2 hours commute just to get to work? So that's the backlash of going out to the suburbs, is what is a reasonable amount to travel to buy that new home with respect to where you work today.
I 100% agree with that, especially since in some metropolitan areas, Los Angeles in particular, they're discouraging driving. They are cutting down the driving lanes. They're increasing the bicycle lanes, which does nothing for the person who has to commute to downtown Los Angeles from Palmdale. What are they going to do, ride a bike that far? So if you've got competing forces, especially with, the urban lifestyle versus the suburban lifestyle, with the guy or gal that has to drive an hour and a half to get to work, I don't know how that's going to be solved. I mean, we're in right now a real estate crunch because they're not building enough houses. Obviously, the only place that's cheap dirt is far away from any metropolitan centers. So if you're going to buy a house, if you're lucky enough to buy a house for $250,000 to $300,000, you've got to drive that far. And I don't know how we solve that problem.
I don't either, Jeff. It's been one of those, mysteries of how are we going to, the land is so expensive here.
Yep.
That they're building home, anything that they're building, home upon home, they're starting out, even in Ventura County, like Oxnard, they're starting out $500,000, $600,000 for, a little box, a 2,000 square foot home.
Well, it's funny. Oxnard, you go out there, you drive out there. Anybody that's in my listening area has probably been out there. And you look field after field after field, and you're thinking, how can this valuable land be farmland? We need housing. But of course, there's been a fight in Oxnard for a generation, if not more, about, keeping the farmland open and free. And of course, they're owned by mega agribusinesses. They're not owned by private farmers as they used to be. So you see the land that's available, and as you said, it is extremely expensive. Hey, let's jump off and get to something else. Recently saw an article which was talking about the minimum wage being raised in Los Angeles and other parts of the country to $15 an hour. And a brand new study came out of Seattle, which suggested that the benefits of $15 an hour for those people that can keep that job versus the number of jobs that are lost is on the negative. So they're really coming out against that. I don't know what you think about a livable wage and things like that, but in Southern California, You've got kids, I've got kids. How are we going to promote generational living and working in one area if there's not the kind of jobs that we need in order to support the community? As you said, the real estate prices are crazy.
Yeah, I have to tell you, with the rents being high,
Yep.
It makes it even that much more difficult. And I look at, freshly graduated college students that have to share, a one-bedroom apartment that's $2,400 a month in the Valley, and they're barely affording that. And how do you give them the, keep the drive in them to want to get their education, but they can't quite get that job to cover just their minimal expenses to survive? It's very difficult.
Yeah, these are some of the things that we try to tackle, right? I mean, as adults, as parents, we say, okay, this is how we can help you, and you contribute and you help. But to bootstrap it and try to, live frugally, I mean, I just don't know. I don't know if this generation can do that kind of living for too long before they just move or go somewhere else.
Yeah, I think you're going to find the Generation X group that they're going to be moving out of state. I really see that the likelihood of people moving out of state is going to increase tremendously, and that's going to be, in the next decade. That's what's going to happen.
Yeah, I think you're right. Fortunately for me, both of my sons are up in Washington and Portland, and my daughter's moving back east. So there you go. They won't have to deal with it, I guess.
No, you'll have to. You'll get to come home and visit, which will be a nice, thing for them, and then they can really enjoy living. They can enjoy their college life. They can enjoy getting into their new career and not be stressed, right? So
right.
I think that's very key for the new generation and giving them the positive mentality to rebuild our country.
I think that's excellent, Hey, April, thanks very much. We're up against the clock. I really appreciate you coming back and being on the show.
Thank you so much, Jeff. Have a good night.
And you do, too, and thank you very much. That's April Lopez from Nations Direct, and I'm Jeff Barton. We'll be right back.
Is your car starting to give you some trouble? Then come on down to Gyra Tire Shop and Service, where we offer a wide range of services, such as new and used tires, balance and repair, brakes, AC repair, professional auto diagnostics. We promise you high-quality service at an affordable price. We're located on the corner of Boulder Highway and Wells Street. Do yourself and your car a favor. Come down to Gyra Tire Shop and Service.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Your nose just a little bit. I need the sun off. There you go.
When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography.
There you go. Good, good, good.
We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out.
ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are going to be at 3.5.
So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, take better pictures, check out one of our workshops. You can check out JeromeHamilton.com. We have a workshops page that'll get you there. We bring the top of the line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. Pick up the phone and give us a call. We are talking mortgages as we do every week, each and every show. We like to get your input, and so if you'd like to email me instead, info@malibufunding.net is my email address. We have a terrific website at Malibu Funding. The NMLS number is 79620, and the website is www.malibufunding.net. We are the sponsor of the show, and I'm very pleased to work for them. Although we bring to the show, and I was insistent upon this, all kinds of opinions, different lenders, people with outside products that may be able to help you. We certainly would like to be able to do that before we do anything. The marketplace is crowded, it's confusing, and unless you have a professional with you in order to help you, and it's going to be really tough. So I've got about 40 different loan officers that work for Malibu Funding on the Malibu Funding site at malibufunding.net, as I said, and certainly the people you hear on the show, we're going to give you their phone numbers so that you can call them directly if you'd like to for different kinds of information. One of the guys that we've had on the show a number of times lately, because the products they offer are terrific in this particular market, is Thomas Trujillo from Lone Stream. Tomas, how are you?
Hey, Jeff, how you doing? I'm doing really great, thank you.
Okay, excellent. And thank you very much. I appreciate you once again coming on the show. I know we've been picking up a lot of loan volume with your company, and one of the reasons is you offer programs that aren't necessarily in the box, meaning they're not cookie-cutter type loans. And we've got a situation, as I've been explaining on the show all day, that we've got probably less regulations coming down, which means there's going to be more money available, but we've also got a shrinking share in the market because refinances are down. So how are we augmenting our own loan pipelines as well as offering more to the customers out there so we can get loan volume to where it should be and obviously offer good, solid loans to the consumer?
You know, you guys have a really good place in the market. You're strong. You're very knowledgeable. You know what's going on. You know how to help your borrowers. Lately, what I've been seeing a lot from Malibu Funding has been bank statement loans.
Right.
You have borrowers who don't have, they don't show the money, they don't show it on their taxes. You know, who wants to pay Uncle Sam? But where are they going to put it? They always put it in their bank account, and we can use that as their income.
Okay, so explain the few steps that you can when you see a borrower and they have a bank statement loan. What are you looking at when you're looking at it? I know you're not looking at tax returns, but you're just looking at bank statements. Some of the other things you might look for in that type of loan.
I just want to if they're telling me they're making $10,000 a month, I just want to see anywhere close to that. I'm looking for maybe a 10% variance. You show me $9,000, you show me $8,500, you show me $11,000. I'm good with that. As a matter of fact, one of the loans you're doing right now with me is you have a gentleman who lives here in California buying a second home in Havasu City. Mm-hmm. We're doing that loan as a bank statement loan. He also has Social Security income. So what are we doing? We're using the Social Security income, we're using his bank statement, and we're slamming that sucker shut this week. He's done. He's moving in.
Well, that's excellent. Now, that's a second home for him, or is that his primary residence?
That is a second home for him. We'll do second home, we'll do investment homes, we'll do primary homes. We want to work with you. We want to be on the Malibu Funding boat, and if that's what you're doing, that's what we're going to do.
Now, what are the loan to value in a situation like that?
On that one, this gentleman is coming in with 20%. It's a $300,000 loan, so I mean, it wasn't so much. It wasn't a big loan amount, but it was a good deal. It was a really good deal for a second home, an investment property. It's a pretty good deal.
Okay, and in a situation like that, are you seeing a lot of second home buying out there right now because the market's pretty hot, right? I mean, prices are going up.
Oh, absolutely. The market's firing right now. I mean,
right.
Yes, prices are going up, but rates are great right now. Actually, another thing you've been doing with me is you've been doing a lot of CalHAFAs.
Right.
Your borrowers are coming in with zero money, no money for a down payment, and no money for closing costs. That's 104% financing. You guys are killing it right now.
Hey, tell me, how does that program work? Explain that.
All your borrower has to do is qualify. He has to qualify with a certain FICO and a certain income. And if he makes a little bit too much income, well, I guess it's all based on the amount of people that they live with. So if you have a borrower making $100,000 and she has 2 kids and that's not enough to cover,
right?
We'll say, hey, you know what? Isn't your mother going to come live with you? Well, you know what? I think she is. And boom, we got it. And if we have a case where the debt-to-income ratio is a little thin and we're just not making it, we have the MCC program where you can use your tax credit as income.
Well, that's okay. So these programs are non-QM, QM loans? What kind of loans are these?
These are FHA or conventional loans.
Okay, so these are all bought by Ginny, Fetty, or Franny, right?
Absolutely. Absolutely.
Well, these are pretty terrific programs. What else have you got for them? Oh, you got a bag full of loans here today. That's terrific.
You know, I'm telling you, you guys have been doing killer business with us, and we really appreciate it. We also have stated income loans.
Right.
Stated income verified assets. So we're looking to see that they do have, you know, they're not saying they're making $200,000 when they're only making $10,000.
Right.
So, you know, we still want to see that it's kind of close. They're still a little risky. But from what the feedback we're getting is they're going to start getting a lot easier to do in the coming months.
Now, is that because the refi market has dried up and there is still a lot of money to lend, and so in order to do business, you have to, you know, change your product line?
Absolutely. You have to stay in touch with the marketplace. Absolutely. Absolutely.
Now, what are the protections you guys are using in order to make sure that these loans are, you know, I guess good loans and solid loans so that we don't have the same mortgage meltdown we had like 10 years ago?
Well, what we're doing is we need to see that there's some asset there. So we have a borrower, I think we just did one for you, where you had a big shot over at Disney who made the money, but he didn't show any of it.
Uh-huh.
He made, I think, $200,000 a year, but he only showed $10,000 in income. Well, we know he had the assets, so we asked to show the assets, and then we'll just take whatever he says on the income.
Now,
so we were able to work it for him.
Do you collateralize those assets, or you just need to see them?
I just need to see them.
Okay.
Absolutely, absolutely. And you know, with you, we never have any trouble with our values. We have appraisers who are out there, who are working for us, who do whatever it takes to get that loan funded for you.
Well, I think with the market the way it is and values going up so quickly, I was talking to April Lopez on the other interview that we did, and she was talking about how 6% a month. Not 6%, but 6% the first half of the year. So we're looking at 12% this year. Property value is increasing. So that tells you right there that what's happening with your appraisals is that it's obviously something that you can do because of the fact that the properties are ascending in value. Do you think that's going to last?
I think so. I think we're going to have a good rest of the year. I don't know what's going to happen next year, but I think we're looking pretty strong this year.
Okay, now have you guys already priced into your pricing model the next raise in rates, which will probably come in about 6 to 7 weeks if the market stays as hot as it is?
We have.
Okay.
We have. Actually, what we've done, we've lowered our add-ons. So our rates are very competitive. They're uber competitive. We lowered our add-ons because we're thinking we want to kind of be like McDonald's. Give me $1, but buy 1 million hamburgers.
Right, exactly. You know, Tomas, I really appreciate you coming in. One last question before you go, and I know you've been busy. Where does your company see the market in terms of product heading in the next 30 to 90 days? Think you're going to stay the same, or are you going to introduce new products?
We're introducing new product. We're thinking that the market's going to start to relax a little bit.
Right.
So we're going to start relaxing more of our guidelines. We're thinking it's going to get a little easier.
Yep.
That's what we're hoping for, and that's what we're getting ready for.
Excellent, very much. Hey, you want to shout out your phone number in case somebody wants to talk to you right away?
Absolutely. My name's Tomas Trujillo with Lone Stream. My number is 323-228-5181, or you can always call Jeff, and Jeff knows how to get a hold of me.
Exactly. Thank you very much, Tomas. I appreciate it. That's Tomas Trujillo from Lone Stream. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Your nose just a little bit. I need the sun off. There you go.
When we do our workshops, we choose top locations like Red Rock Canyon for fashion, or we choose Cancun beaches for the glamour photography. We choose top models to bring down there. That takes the element out from you guys having to worry about where you're going and what you're doing. We scout out the locations even in those places to make it easier for you. All you have to do is concentrate on your equipment, your composition, shooting the images, and getting great images, whether it be for your portfolio or for you to advance your career.
There you go. Good, good, good.
We set up all the models. We have sponsors like Canon that bring out lenses and camera equipment, bodies that you can work with. We teach you how to use those. We teach you how to work with your equipment that you bring out.
Actually, it's a little bit bright, so I'm up to 1,000. ISO 400, I'm shooting 1,000 shutter. I'm wide open at 2.8. Some of you are gonna be at 3.5.
We work through all the lighting issues and the lighting process with you, so we do the whole workflow from beginning to end. How to set it up, how to work with the models, how to work with your equipment, and in the 3 and 4 day workshops, we also get into editing, post-processing, or workflow.
A little more, just like right over the top of me.
At Hamilton Workshops, it's not just about me teaching you. We bring in top-of-the-line guys that are shooting fashion, sports, wildlife, landscape, and we have all them help you as well. They're there to teach you how to use the equipment, how to shoot, how to compose everything.
I'm gonna have you come up here, and you come down one knee. So that way you're a little bit taller than her.
I've been a sports photographer for about 23 years, and I've been published in Time Magazine, USA Today, Sports Illustrated, and I love what I do. And the secret to being a good, great sports photographer or any type of photographer is you gotta love what you do. And if somebody wasn't paying you and you do it anyway, then you know you're doing the right job, and that's what I love to do. And that's what I want to try to instill in any student that comes through these Jerome Hamilton workshops is the passion and the love for every photo.
Good, 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 both of you.
So whether you're a beginner or intermediate and you want to advance to the next level, or even if you're advanced now and you just want to learn more process, more value, learn your equipment a little bit better, or take better pictures, and you want to advance to that next level, check out one of our workshops. You can check out jeromehamilton.com. We have a workshops page that'll get you there, even if you just want to email and talk to some of us now. I guarantee you there's going to be top-of-the-line photographers, not just me there teaching you, but we bring in this industry standard people there that are going to help you. We bring the top-of-the-line models to all of our events, and we take you to the best places.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone and give us a call. We talk mortgages. We talk your mortgage, your money, what you're going to do with it. Maybe you're going to sell a house and you want to buy another one. Maybe you want to buy a house for your child. Maybe you need to take money out of your house because you have some medical bills, some credit card bills. You've heard the commercials out there. There's plenty of good reasons to take money out. If you're going to take money out of your house to go on a vacation, I don't think you should do that. But if you're doing it for a terrific reason, I think that's a great way to go. It's going to get easier to borrow money in the next 6 months. Now, why do I say that? If you've been listening to the show today, you know that we've been talking about regulations, we've been talking about different kinds of programs, and we've talked about why refinances have gone down, which means that all the lenders out there need new programs in order to lend money, in order to fill up their pipelines, to make some money, keep people employed. That's how it works for everybody. So there is opportunity for you out there in the marketplace listening to the show to be able to get a loan that you might not have been able to get a year ago. With me today, once again, from Las Vegas, Nevada, is Gail Whiting from Capella Mortgage. Gail, how are you?
I'm great. How are you?
I'm great. I'm hot. It's very hot. Is it hot there?
It's Nevada, yes.
It's Nevada in the summer. I know. It's incredibly hot. And anybody who's in Southern California listening to my voice, especially the Inland Empire, those great people who listen to the show, it's hot. It's always hot. Searching for real estate in the hot weather is not easy. Gail, what are your customers saying to you about looking for properties and the kind of loans that they're looking for?
Of course, we're saying it's difficult to get their offers accepted.
How many offers? How many offers per house are you seeing out there?
Well, just what the realtors have told me and what customers have told me, they can make up to 5, 6, 7, 8 offers.
Yep, that's a lot. Yep, I agree.
Yep.
It's a lot. What they realize after they've had their offers turned down is they should, offer a few extra dollars. You don't want to lose a house that you absolutely love because you didn't put in an extra $1,000.
Right, an extra. Is that what it's going to take in Vegas? Because I think out here it's more like $5,000 to $10,000 over asking, or more than you would.
California is just always higher.
Yeah, it is.
Than
true.
Nevada.
Yeah.
But do what you honestly would pay for that property, not what the sales price is, because there's a lot of eligible buyers out there.
Right.
Who have now gotten over their credit mishaps from the fall, from the mortgage crash.
Yep.
Who now feel like employment is steady. They're confident to go out there and buy. And these are your competitors on bidding on a house. There are a lot of buyers in the market. And, if you feel that, you really want to get this house because this is your house,
right.
Bid,
Yep.
what you would feel comfortable bidding on if you won the bid. So if it's $2,500 and that's where you're at, then bid the $2,500.
Hey, Gail, when you're sending these people out and you're talking to the realtors, obviously you have to supply them with some kind of pre-approval letter, pre-qualification letter. So are you doing this mostly on hard money? I know Capella does a lot of that. Or is it mostly conventional stuff, FHA? What are you sending them out there with in terms of the pre-approval letter?
Well, I think everybody can do the conventional FHA stuff, but we do a lot of self-employed in what we call our middle-of-the-road soft money programs. Self-employed people in their tax returns cannot, 9 out of 10 times, I would say, maybe it's 8 out of 10 times,
right,
cannot make it through that conventional financing because they're self-employed. They get a lot of tax breaks for being self-employed, and
of course,
people you take advantage of your tax breaks and credits, and that doesn't equate well when you're going for a conventional or government-sponsored loan, conventional FHA.
So you actually find money for these people to lend to them, right? And so the qualifications for that are a little bit different. Tell us the typical customer that you deal with.
Oh, wow. Self-employed, anywhere from a person self-employed, a lot of money running through those business bank statements, and we do a cash flow analysis on them.
Right.
If your credit, you have debts to your credit, it's not much. Typically, self-employed borrowers meet the credit depth. You can do 12 months business bank statements, or 24 months business bank statements.
Okay.
And if you don't have the credit depth, or maybe the 24-month average is a higher income. So we look at both. You've got self-employed, different loan programs. They'll immediately take a 35% expense factor. Other companies will take a 50% expense factor, but will be relaxed on other conditions.
Right.
So we shop the lender. Every lender has a different appetite for the kind of loan that they feel secure doing.
Of course.
A lot of the self-employed people who are falling out of conventional, are high-income earners. It's just their tax returns.
Let me ask you a question. In terms of these type of loans, obviously the credit scores may be a factor, and certainly the rate that they're going to get is going to be a factor. But these are the type of are they investor loans? Are they owner-occupied loans? Are these type of people who just need to get in quick before they can either refi it into something conventional? What does that end of it look like?
Well, the really self-employed people who have these, pretty significant businesses are really going for the primary residences,
right,
for themselves because they just couldn't qualify. and they have the 20% down, the 30% down. They're just not qualifying. Now, there is the investor program where the loan is done based on the cash flow on the subject property.
I see.
So you don't show income and you don't, state a job. The loan is qualified that the principal, interest, taxes, and insurance is less than the mortgage payment. Those are really great loans.
What is the rate on a loan like that, or does it vary?
FICO score driven, and down payment, of course, is always your answer to the rate.
Okay. Okay.
But I would say typically my 680, 700 FICO score borrowers, where they're not showing income, but when I'm buying an investment property, are near the 8%.
The 8%, and that's what the money is going for in Las Vegas right now?
Yeah, and that investor cash flow program. Now, that's a no-income loan.
Of course. Hey, Gail, we're running up against the clock. I want people to get a hold of you because obviously Vegas is a terrific market, and if they're looking for some money out there and they're not a conventional borrower, you're the person to call. So could you shout out your phone number for people?
Sure. It's 702-503-3252.
Thank you very much. This has been Gail Whiting from Capella Mortgage, offering some terrific advice and a different way that you can go out to Vegas and buy something in that terrific market. Gail, thank you very much for coming on the show.
Thank you, Jeff.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. We always like to have calls, and whether it's on air or off air, your questions are very, very valuable to us. We look at what we get every week from either Twitter or Facebook or calls or emails, and we kind of design the program for the following week. We had a lot of questions about what programs are coming up, where's the market heading. Rates are obviously always of a concern, although the rates in general, even though the rates have at the Fed have gone up twice in the last 90 days, really haven't affected the mortgage rates all that much. We're still in the low fours in terms of 30-year fixed rates. The 15-year fixed rate is in the threes. So rates couldn't be better. So in terms of what's going on out there in the marketplace, we try to keep our ears to the radio show and what feedback we get. So if you're out there listening right now and you want to get in touch with us, info@malibufunding.net is my email address. And we read the emails every day. And certainly if you go to Twitter @Jeff6493, you can follow my tweets about what's going on in the marketplace, myself, my personal life. And these things blend quite nicely. Last week we had Debbie Harris on the show, and she talks a lot about the professional and the personal kind of blending in such a way that you're almost having a persona out there in the cyber world, and anybody who's on the internet will tell you the same thing. If you are presenting yourself in a certain way to a certain audience, that is going to be both on the personal level, and if you're looking for a job right now, let me just tell you, your employers are going to go online and see what your profile is. They're going to look at your Facebook, they're going to look at your tweets, they're going to look at how you're handling yourself in either a professional manner or what you're saying non-professionally, because that's really going to affect their decision if you're going to get hired. And I know that right now I have 2 sons in the marketplace looking for work right now. So I tell them all the time, make sure that when you're tweeting or you're on Facebook, that you're always giving a positive spin. I know that to some people it's a lie. Some people say, hey, you know, that's not really you. You know, why are you doing that? Well, one of the things about Facebook and about the internet is these things remain on there forever. So if you want to be snide and cynical and snarky, that's fine. But if you want to be positive, upbeat, and certainly take a cause celeb in terms of your concerns about what's going on in the world, a lot of people like that better just because it's an easier read and most people can support, whether it's global warming or, the local pet store going out of business and you're trying to find homes for the cats and the dogs. These are always good, positive things, steps to put forward. In that, what we're looking at today in the marketplace. Let's go to news to use just briefly. As I was stating earlier in the show, credible study came out of Seattle suggesting that $15 minimum wage is not good for the local economy. As a matter of fact, it costs more jobs than the jobs or the money it would save in terms of, obviously, the 15-hour a minimum wage. And here in the Southern California area, whether it's in Los Angeles County, San Bernardino, Riverside counties, a number of other counties, Santa Barbara, certainly San Diego, Orange, they're all looking towards somebody to tell them what to do with this push the minimum wage to $15 an hour. The study in Seattle refers to a number of factors, but basically said that if you go to a $15 an hour minimum wage in Seattle, it would cost people $125 a week versus if you kept it at a reasonable or a lower minimum wage, meaning that more people would be employed, less people would be unemployed. And because of that factor, their recommendations, actually they didn't give a recommendation, they just had a study. And it's very interesting. And you can go by, guy's name who wrote the article about the study is Max Enferund, and he writes for the Wonk blog analysis, and it's very interesting read. There's a lot of these things that are coming out about what drives people to employ. If you've got a young person in your family and they're looking for summer employment, we read a study last week that said that those particular jobs are going to go bye-bye, and you're not going to have summer jobs anymore, and you're going to have to look for things entrepreneurially or when I was a kid, and I would bring Daryl on for a second. When I was a kid, I picked apples, 50 cents a bushel. That was my summer job, and I did a lot of it. What did you do for your summer job?
I threw some newspapers.
Yeah.
I worked at See's Candy in the back stocking things, but, we cut some lawns.
I did all that
stuff around the neighborhood. I mean, I really didn't grow up in a rural area where you could, bale hay or pick corn
I did that
or anything.
too. I did that too.
But for my grandparents, I shoveled a lot of horse crap.
Yeah, exactly. And we're talking about these kind of things, and I talked to April Lopez earlier in the show about it. What are we going to do with our kids, or what are our kids going to do with their kids? I mean, we're looking at a world which is going to automation. Certainly anybody in the fast food sector is going to tell you that robots, 10 years less, right?
Well, right now you can buy gas at a gas station with nobody there. I'm looking. The time will come where you're going to go through a drive-through at a convenience or fast food restaurant, and there's not going to be anybody there, and they're going to make the food for you when you order.
Up in Seattle, at the airport, they have a restaurant where you go in, you sit down, they have a tablet in front of you. You order your food, and it gets brought to you. That's the only human interaction you have. There's no waiter or waitress or server. There's nobody like that. All they do, bring the food and leave. Everything else is done through the tablet.
Saw a buffet recently that had a sushi robot.
I like that.
Yeah, sushi robot.
Could you abuse the robot? That's the only thing I would like, squirt mustard on him or something.
That's right. Insult it.
Exactly.
This Toro isn't fatty enough.
Yeah, that's exactly right. Okay, so, these are the things that are coming in terms of how we're going to deal with that as a country. How are we going to deal with that? We also talked about the commuting. How are we going to, employ people in one area, yet they have to commute from such a distance that it's almost impossible to make the math work, let alone we're adding another car, another 100 miles a day to the commute. I don't know how we're going to deal with that.
Well, when you talk about the minimum wage especially, I work with an associate that went to one of their vendors, and they said, how can you expect to get a quality product out of this company because they're only paying $10 an hour to the employees? How will they remain faithful? Why should they have any pride in their work? Why should they care when they're only making $10 an hour? And, that's pretty close to minimum wage where we are.
Yeah.
And, when I grew up, when you grew up, if you had signed up to do a job and you were getting paid for it, no matter what the wage was, there was a certain amount of ethics that you had that you're going to do the best job that you could, no matter what the amount of pay was.
That has really changed. Although I must say, a lot of the immigrants that I deal with in our business, first, second, third generation, who didn't grow up here, who came here, they have a different mentality about work ethic. It's a lot of the people who were born here, who grew up here, and I hate that word entitlement, but that's what it is, that, I need to get paid before I can do the job the best I can. And it's just a flip from how you and I were raised.
No, if you sign up, you sign up, right?
Right.
I mean,
that's right.
It shouldn't be, I'm waiting for the $15 an hour, I'm only working for 10 now, so I'm only going to do half the job.
Well, you and I, we're entrepreneurs, and we've always sort of run our own business, even though I know you've been in the corporate world, although radio, being what it is about as corporate as you can get.
But yeah, I've been in the big business of aerospace, absolutely.
Oh, that particular part of your career, which we've talked about on the show, is astounding, really. But in competing for jobs like that, and most of the people who are out there in the listening audience go to work for somebody. So what is the pride, the ethic that you bring to work? At the same time, how do you guarantee yourself a livable wage if what we're talking about here, which is really not that much, $15 an hour? I mean, really, what is that? That's $30,000 a year, and I don't know how many people can live on $30,000 a year.
Well, plus, but it does make a big difference between $10 an hour and $15 an hour if you own and run a donut shop and you want somebody to run the cash register.
Well, that's exactly right. And I think there has to be some way with which you can break in younger people into the job force on a tiered system with which they're not there to work for their career. If you go to work for McDonald's and you're making $15 an hour, you're not supposed to be there for 20 years. These are introductory jobs that you're supposed to move on. And so without those available at lower wages, I don't know how we're going to, well, like I said, I think a lot of these are going to be robotized anyway. So, are there going to be those kind of jobs available? I don't know. You like that word, robotized?
Hold the mustard, robots.
Exactly right. Hey, listen, I got some other things here. I don't know how much time we have left in the segment.
About a minute.
Okay, very good. One last thing. Okay, Black Knight talked about housing and the high price that most houses in Southern California are. There's a couple of things I wanted to talk about. The current value in the United States, average home is $275,000, and it's up 1.2% over last month. It's up 6% this year, and the change from the market peak historically, well, there is no change because this is the market peak historically. So if you're out there right now, I understand and feel your pain in terms of the housing market. Daryl, I appreciate you jumping in.
My pleasure.
Okay, very good. I'm Jeff Barton, your voice in the mortgage industry. We'll see you next week.
Want to know how to create more business and save money? Simple. The answer is video. Video shares are the fastest growing form of word-of-mouth advertising, and according to InternetRetailer.com, visitors who viewed a business video were 85% more likely to buy after watching it. People today are on the go. They don't have time to read text, but they have 1 minute to watch video. At HD Video King, we not only create quality video that's right for you, we coach you on how to get the most from it. Call today. Our award-winning staff are ready to assist.